Georgia Capital has a unique position as an experienced institutional financial investor in Georgia. The company was created in 2018 when BGEO Group merged into Bank of Georgia and Georgia Capital. It is a private equity investor managing a portfolio of over £1 billion with a focus on scalable businesses. In this video, we discuss the key points of its investment story. Georgia Capital is a quality play on a fast-growing frontier economy at the junction of Europe and Asia, capitalizing on trade flows in both directions. It has been in a secular growth trend for over 20 years, with a 5.5% average real GDP growth rate between 2003 and 2023. Its economy has been assisted by structural reforms that made the country an attractive place for doing business with stable governance compared to other countries in the region. The International Monetary Fund expects this growth to be sustained in the coming years at above 5% annually. Georgia enjoys a boost to its GDP and foreign currency flows from the information and communication services sector, driven by the influx of highly skilled immigrants, mostly from Russia. Its portfolio consists of resilient and well-established businesses in Georgia, including one of the country's top banks. Around 90% of this portfolio is valued externally, either by public markets, as Bank of Georgia is a listed company, or the independent valuer Kroll. It has exposure to the country's growth story through several core sectors of the economy, including mature businesses of retail pharmacy, hospitals, insurance and its minority stake in Bank of Georgia. It also holds investment stage companies in renewable energy, education, and clinics and diagnostics, among others. Georgia Capital is an active private equity investor that supports growth of its portfolio companies both organically and through a buy-and-build strategy. It also encourages companies to incorporate best business practices, including ESG. The investment team has around 20 years' experience in building local leaders, as the members of Georgia Capital's investment team were previously responsible for Bank of Georgia's investment division. In December 2021, Georgia Capital sold its water utility business to one of the top water companies globally, realizing a 2.7x multiple of invested capital and a 20% internal rate of return. Georgia Capital maintains a strategic focus on deleveraging. It continues to decrease its debt at holding level, supported by stable and recurring income generated by its relatively mature portfolio and distributed to Georgia Capital through dividends. In August 2023, the company refinanced its debt by issuing a $150 million sustainability-linked bond, maturing in 2028, rated BB- by S&P, which attracted high-profile international financial institutions. The company pays an 8.5% fixed coupon, which was broadly in line with U.S. corporate high-yield bonds at the time of issuance. The company regularly performs NAV-accretive share buybacks. It invests in companies that have potential to reach sufficient size to attract international investors, thus expanding its exit opportunities pool. When making capital allocations, the company intends to buy assets at a higher discount to their listed peers than Georgia Capital's discount to net asset value to generate a higher expected return than buying back its own shares. However, given Georgia Capital's high discount to NAV in recent years and good progress on its deleveraging agenda, the company spent $86 million on NAV-accretive share repurchases since its inception in 2018 to end 2023, which represents around 17% of its issued capital. If you would like to find out more about Georgia Capital, please visit www.edisongroup.com.